I did this exercise. I looked at different metrics, and each time it brought me to, I forecasted what is a more fair inflation number. Let's say if you go back 30, 40 years, rather than say 2, 3%, more like 7 or 8% annually compounding. And that also brought me to a range from, I think it was about 275 to 325 in silver, if you do 7 to 8% inflation. So you were always somewhere around that $300 level. And that's basically how I got to $300. And, I do want to say this, that would create a lot of havoc. I'm saying that silver could go to 300 in a full blown mania. I'm not saying it's going to 300 and that it's staying there.
In his book, The Great Silver Bull, PeterKrauth derived a valuation of $300 silver through technical analysis. Krauth has a model that forecasts that gold's price will rise to $5,000 by 2030, which would drag silver's price up to $300. This is due to gold's use as an inflation hedge. PeterKrauth is the publisher of The Silver Stock Investor and a prominent figure in the world of precious metals investing. In today's video, PeterKrauth shares his analysis of silver's potential peak price, drawing parallels with the 1970s silver market. He analyzes gold prices, the gold-silver ratio, and U.S. home prices, suggesting silver could hit $300 during the current bullish trend. Investor interest in silver has improved in the first quarter of this year, partly reflecting optimism that the start of a rate-cutting cycle is in sight, which the U.S. Federal Reserve had reaffirmed after the central bank's March meeting, it said. Based on his analysis, Krauth uses historical home prices to estimate silver's value today, suggesting it could be above $300. Additionally, Krauth considers higher inflation rates of 7 to 8%, aligning with the $300 silver price range. Historically, gold and silver have seen significant price increases during inflationary periods. For instance, during the inflationary years of the late 1970s, gold prices skyrocketed. Similarly, silver prices followed suit when inflation surged in the early 1980s. This pattern is not coincidental. These precious metals are known as inflation hedges for a reason. They have an intrinsic value that doesn't erode in the face of inflation. However, PeterKrauth acknowledges potential disruptions to silver-dependent industries due to supply constraints and pricing strategies. Now we present the clips of PeterKrauth's insights from his recent interview with Silver Bullion TV. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I went back and looked at multiple indicators that what other assets were priced at when silver peaked. And the main peak is the true analog that we have for what I think is the current secular bull in silver, which was the 1970s. And you had silver peak at, which was, $50. You had gold peak at $800. The ratio bottomed, so the gold-silver ratio bottomed at about 14 or 15 at that point. I'm going to go with 15. It's a bit more of a round number. And so with that in mind, I said, okay, if the ratio was able to bottom at 15, gold, silver, let's start with the gold price. That will determine with a given ratio what the silver price would be. So I said to myself, conservatively, where do I think gold will peak in this market cycle? And I said, okay, I think that $5,000 is pretty reasonable, realistic. Look, we're at half of that already, and things have really only barely started to get going. So I think that's still very reasonable in terms of a target. So if you say $5,000 gold, and you do a 15 to 1 silver to gold, that brings you $333 silver. So not a stretch. I said, all right, well, it's silly to forecast $333 silver. I'm going to say 300. You might as well pick a round number, and then you can, have some leeway up or down. Then I looked at, for example, the average home price in the U.S. in 1980 when silver peaked, and it took around 1,400 ounces of silver to buy the average home. And so if you look at just today, I'm not even talking, going out 5 years or 10 years when, things will continue to inflate in terms of prices. But if you look at today, the average home in the US is about $500,000. And if you take a 15 to 1, 1,500 ounce silver to average home price, you are again at $333 silver. So I did this exercise. I looked at different metrics, and each time it brought me to, I forecasted what is a more fair inflation number. Let's say if you go back 30, 40 years, rather than say 2, 3%, more like 7 or 8% annually compounding. And that also brought me to a range from, I think it was about 275 to 325 in silver, if you did 7 to 8% inflation. So you were always somewhere around that $300 level. And that's basically how I got to $300. And, I do want to say this, that would create a lot of havoc. If you think about the industrial uses, even if many of these uses go for tiny amounts of silver, it's still going to wreak havoc. First, they have to be able to get the silver if there's enough supply. And two, paying $300 an ounce is going to throw off a lot of pricing strategies. So I'm saying that silver could go to 300 in a full-blown mania. I'm not saying it's going to 300 and that it's staying there. Although at these days, the way inflation's going and, the overall outlook, I'm not saying anything's off the table, but that's certainly not my forecast.
Regarding silver inventories on platforms such as LBMA London, Shanghai, and COMEX, PeterKrauth highlights a notable decrease over the past 3 years. He predicts a surge in silver prices due to significant declines in these inventories, suggesting industry dependence on dwindling supplies. Silver prices remain well supported at elevated levels as robust demand continues to outweigh supply, creating a further drawdown in above-ground stocks, according to the latest research from the Silver Institute. According to the Silver Institute, after a strong start to the year, record industrial usage and a supply deficit should support silver. Notably, Krauth observes a 40% decrease in SLV over 3 years, possibly tied to SLV unit prices. He predicts a 12 to 24-month drawdown before secondary inventories run out, signaling a bullish silver market. Let's get back to the interview.
If you look at the inventory charts of the LBMA London, if you look at Shanghai, if you look at the COMEX, in the last 3 years, they've all been down about 40%. And if you look at their registered silver, which is the silver that's actually available for delivery, that's down about 70%. So when I saw, and there's no sort of perfect conclusive proof that this is what's happening, but you'd have to imagine that the industry facing, if the sector is facing these large deficits and the industry's getting their silver nonetheless somewhere and not pushing the price up, then they're drawing down on inventories. And to see these inventories shrink that much, we're talking about 800 to 1 billion ounces perhaps in the last 3-4 years. The global, I have a really, really interesting chart that I put together. I looked at what had been happening at SLV. SLV is the world's largest silver ETF. It's the first, established in 2006, has about $10 billion of market cap. And you had the same data. In fact, over the last 3 years, inventories in the SLV are down about 40%. And what was really interesting was I looked at a chart that shows concurrently the price of SLV and the amount of silver held by SLV. And until 2021, so you had about 15 years of history, you never saw a period where you had either a sideways price for the units, or for silver, let's say, price for SLV units, and a considerable, notable, sustained drawdown in the silver held by SLV. Until 2021, that's when that actually started to happen for the first time. And that to me was quite the revelation. I thought, okay, this says to me that you've got large industrial users are buying long futures contracts. They're standing for delivery, taking delivery when they mature. They could certainly easily be buying large quantities of silver ETFs. And when you own enough units of a given ETF, you can ask for the physical metal in exchange. So they just need to go to the administrator and say, here, I have so many units. I want the physical silver in exchange. This is where I want it delivered, and away you go. They fill some forms, pay some fees, and pay for delivery, and they get their silver. So I believe that explains these drawdowns and the capping, so to speak, on the silver price. And I also think that this can only go on for so long. These inventories, because we're not getting more mine supply or recycling, nothing material. So these drawdowns can only go on so long till these inventories, are completely empty. And if based on the pace of the drawdowns, based on the pace of growth in demand, because supply is flat, I think we have 12 to 24 months before we run out of these secondary inventories. And what I find really interesting is that it was actually a report by TD Bank just recently released about a week or so ago. And they came to the same conclusion. They were saying they saw 12 to 24 months before these inventories are drawn down. And they basically felt that was the same thing that was happening. These large consumers are getting their silver there. So bullish for the outlook for sure, because if those exchanges and the ETFs do run out of silver, the silver price is going to have to go considerably higher.
Silver prices in the domestic market are at lifetime highs amid multiple catalysts like safe haven demand, due to escalating geopolitical tensions, hopes of U.S. interest rate cuts, speculative buying, and a sharp rally in industrial metals. The ongoing trends in silver inventories underscore the evolving environment of the precious metals market. Exploring how these factors intersect and influence silver's future trajectory presents intriguing opportunities for further research and analysis. Given the trends discussed, what factors do you believe will have the most significant impact on silver prices in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.